Many sights to see, and when I look in my window, so many different people to be, that it's strange, so strange. You got to pick up every
Hello, traders. Kerry Wagner here. It is currently 10:45 a.m. in Honolulu, Hawaii, Tuesday, the 26th day of July, and this is the daily report for gold. For the third day in a row, we have gold substantially higher, currently trading up about $5. As you can see, current print on the board is just below 1620, 1619.65. It is currently still trading. Cash in the market. We do have, as I said, for the third day, a higher high. And on a closing basis in New York, of course, we will get a new record high today. First chart I want to take a look at is going to be our 240-minute chart. I'm going to look at it in two ways, Henkin format as well as standard candlestick. Now, yesterday, I talked about the fact that we saw a little bit of weakness come into the market. We had this doji Henkin come in, and as you can see, we had a consolidation in the market, not really any kind of correction in the market. You can see the corrections in the market here. You can see a correction in the market here, and you can see corrections in the market here. But this latest activity was really a stalemate. It was waiting for new information. When new information did not arrive, when no compromise was reached, the reaction was a higher gold market. I've just gone ahead and converted that into a candlestick format, and the only thing that I can see within this shorter term chart is again a variation. This is after the stalemate, but you've got the small body. It is surrounded by a up candle and a down candle and an up candle and a confirming candle. That would be this, which is actually a buy signal based upon a three-river morning variation, Next, we want to go to our 360. And this, of course, is in straight candlestick format. And as you can see, the old record top that we have been looking at as a point of resistance now seems to be a new level of support. Because what we can see in this market is as this market came up and created this new top. This new top right here is around 1624, I believe. The market tested that new top. It came back down to test the resolve of the bears in the market, which is quite weak at this point. I think one of the lines that I wrote in my last Kitco article is really appropriate to repeat right now. And I'll paraphrase it, but I wrote it, so it doesn't really matter. But I said that any attempt for the bears to have a long-term bearish stance is absolutely futile. And the reason I believe it to be futile is the fundamentals are so strong in the market that I think this market's going to head much higher first. But I think that long-term, any kind of bearish stance in gold will be met with nothing but absolute disappointment in the market. So that once we saw the market go to this area, you can see that we have some lows that are just around probably 1608, 1609, something in that area. And you can see that now this again is a 360-minute chart, but you can see that we have had a surge, really a surge in the market as it really tries to stab at this record high, which is 1624. Now, that leaves us with one primary question, and that primary question has to be, where is gold headed? And let's spend a moment and try and cover that. Traders, as you know, this is the chart we have been using for at least the last couple of weeks, and on it we are looking at a couple of things. primarily, I have an Elliott wave count, but primarily what I'm looking at is a technique known as a Fibonacci extension. I have two basic extensions here, extension 1 and extension 2. Now, extension 1, when we take a look at it, is from, if we go to the low here, which is the beginning of this particular rally, which is right around 1308, I believe. Our first extension is simply wave 1. This is wave 1, 2, 3, and then we're in 5 right here. And the second extension is this entire rally from 1308 all the way up to the old record top. And boy, when I say old, it wasn't all that long ago when we take a look. That was back in April, but the old record top of 1577, which we have, of course, taken out with a vengeance. Now, when we do that, when we look at those particular extensions, let me go ahead now and blow this chart up for us a little bit more so we get a better idea of what we're looking at. You can see that in terms of some benchmarks that I have, our first real benchmark, of course, this is the retracement that we had after the market hit the record top. It's 1580, and it's really based upon this move from here to here, which was our former high right in the marketplace itself, which was about 1608. And you know that we put up these extensions a long time ago, but my belief was that the first band that we would have to overcome is this Fibonacci harmonics. This Fibonacci harmonics is in between 1609 and 1614. Now, here's the key, traders. Today's trading activity, if in fact we get a substantial close above this area, as you can see, has absolutely categorically broken out today. Once again, this is a daily chart. So when we look at the record high, this is our new record high, which is 1624 in terms of price, but not in terms of close, because our record high in terms of close has been 1609. Right at the top of this particular channel. Again, the channel that I'm looking at is this harmonics right in here. And you can see that today we have absolutely taken that out because the market in terms of a closing basis right now is well above that. So the question bodes, what is our real next target? Excuse me. Our next target right now is going to be, in my opinion, this next set of harmonics. This next set of harmonics that we have puts gold between 1641 and 1647. This is where I believe short term, or I should say interim term, meaning the next couple of weeks, I think that we've actually got a stab at this particular level between 1641 and 1647. After that, we have the market, I believe, will head to about 1680. Now, will we have peaks and valleys? In other words, will we have corrections in between? That's very, very difficult to say. My anticipation is we probably will. But the way that we have seen gold trade, and that is when we take a look at this particular rally that we just experienced, in which we saw gold trade from about 1475 all the way to really the top of this Fibonacci harmonics level. And again, this Fibonacci harmonics level was simply looking at wave 1. That's all I did. I take a look at wave 1 and I extended that. It was an extension of wave 1, and that's how I targeted this number. What I'm finding interesting is that when it actually came and hit those numbers, I'm not surprised that it hit them. What I was surprised about is how strong of a channel it formed short term, a channel that it formed in between these two levels. This level here being our 38% retracement of the most recent move, and then this being our extension of wave 1 right in here. But as you can see quite eloquently, there was definitely a channel, and yesterday the market took that channel out, closed right at the top of the channel, right in here, and then today has traded above that. So as far as I'm concerned, when we consider where this market is right now, we are in uncharted territory. And the only way I know to work with uncharted territory is by utilizing A, Elliott wave, and B, Fibonacci extension. So those are the areas that I'm looking at in the near future. This has been Gary Wagner, wishing you, as always, good trading. Let's maintain our long position. Let's maintain the add-on that we've had. We did move our stops, I believe, to 1590 the other day. I would look to add on another dip if we get that. But traders, you should be positioned pretty well in terms of the size of your position at this point. And of course, you're experiencing, hopefully, some very, very good profits. Bye-bye.
Many sights to see. And when I look in my window, so many different people to be, that it's strange